Good evening, good morning, good night, YouTubers, wherever you're watching this transmission. It is I, Mike Martins, and the bubble has popped in Australia. I kind of held back on reading this article 2 weeks because I kind of needed to see the way the trend was going to go the next couple of weeks. And we got Q1 numbers all out now, and right now Q2 has come out. So I'm kind of feeling out where the trend in the housing market is going in Australia. So I am very safe to read this article now because I just wanted to make sure everything was there before I put this out there. Housing pops in Australia. So here it is. It's by Wolf Street, by Wolf Richer. It's one of the very few financial pages that I do read that's actually on the money with a lot of things. He's got a lot of cool things to read here. So check him out. When you get some time. He's got a really good page, so it's really good. He breaks down his page by different sectors: beer, wine, and food, brick and mortar, credit bubbles, cryptos. Really good page to follow. Anyways, guys, a housing bubble pops. Update on Australia. So, guys, when you got someone in the United States of America writing about Australia, you know things are not doing too well. When you got a Canadian Portuguese guy that's living in Canada that's following Australian housing and where things are headed, it's not a good thing, people. So let's see what it says. It is rare that housing markets make such a beautifully defined U-turn after a long, hard surge. In Sydney, Australia's largest housing market and one of the world's biggest housing bubble, prices of all homes of all types fell 5.4% in July compared to a year ago and 5.5% from a peak of September. Prices of single-family houses dropped 7 points and prices of condo units fell 1.6% according to CoreLogic Daily Home Value Index. Now, why are condos falling less is because they're cheaper inventory, so people that couldn't buy on the housing market start to jump onto the condo market and the what do you call it, townhome market. So that's what happens usually when the detached starts getting out of control, and why the condo market takes a little while to falter. The most expensive quarter of the market hit the hardest, with prices down 8 points in July compared to a year ago. Across the so-called most affordable quarter of markets, least affordable in quotations would be more appropriate. Prices fell 1.8 points. And supply in Sydney is starting to come out of the woodwork. Total number of homes listed for sale based on a rolling 28-day count jumped 22% from a year ago to 26,103 listings according to CoreLogic, the most since 2012. In a chart below, the number of homes listed for sale in 2018 has hold on a second. Is detonating with the black line. It's below only blue line in 2012 that's creeping up on it. Note the seasonality with listings getting pulled during Christmas holiday period chart via CoreLogic. So here it is, this guys, I read this on Trends in the Housing Market. Remember this black line here? So there it is, creeping up. And comparable to all the other years here. You see what I'm saying? Ooh, ooh, look at that. Ooh, that's going to reach here. Oh no, they're going to touch. And so goes the rental market, where conditions eased further in July. CoreLogic noted in its report, in Sydney's rents fell 0.4% year over year. While that might not sound like much of an annual decline, it is the largest decline on record in CoreLogic data going back over a decade. Melbourne lags a few months behind Sydney, but it's now catching up. Home prices in Melbourne, hold on a second, guys, sorry. Fell 0.5% in July year over year, according to CoreLogic, are down 3% from the peak at the end of November 2017. House prices fell 1.4% from a year ago, while condos are still up 2.3%. The index is now back to where it had been at the end of June 2017. So there's the index there. You can see it plain as day. And look at that. Wow, it just comes back in 2018. And you got Q1 there showing at the beginning of the graph. Wow. The most expensive quarter of Melbourne's market, as in Sydney, got the hit the hardest, with prices down 4.1% from a year ago. In the most affordable quarter of the market, prices are still up 7.5 points. Mind you, they're still overvalued is what they're trying to say here. And supply is increasing. In July, where 30,029 homes listed for sale, up 11% from a year ago, the highest since 2014. These are all patterns for the perfect storm of a housing bubble pop. Okay, guys? CoreLogic tracks the largest 5 of Australia's 8 capital cities in separate index, Sydney, Melbourne, due to their enormous size, weights of the most. The remaining of the 5 capital cities index prices were mixed in July. Brisbane home prices fell 1.2%. Adelaide home prices fell. Home prices ticked up 0.7%. In Perth, home prices fell 2.3%, and houses down 1.8%, and condos down 4.6%. Prices started skidding late 2014 when Australia's got hit by the mining bust. Remember the mining is in the pits in Perth. I've been talking about that for years now. In aggregate, the 5 capital cities fell 2.4% in July year over year. That's adding a plus to it, guys. So the aggregate numbers are 2.4%. With aggregation, note that May was the first month in the year-over-year decline since October 2012. The index has now shown decline month over month for 10 months in a row and is down 3.1% from the peak of October last year. So this graph is very good, actually. Oh, look at where things are headed right now. This is the CoreLogic Daily Value Index. Okay, it starts with Q1 in 2017, and it takes you to where we are right now. Across the country, home prices have dropped 1.6% year over year, the largest annual fall since 2012, according to CoreLogic, are down 1.9% since the peak of September. Mind you guys, prices are so high in Australia, the unaffordability level, wages have not moved. I think they got a recent minimum wage hike. I read that article a few months back, but that's still not enough to offset the cost of living. It's just way too high. Groceries are a record high right now in Australia. Water, basic necessities, fuel's been going up, gasoline's been going up in Australia tenfold. So it's been really tough right now for Australians, because when people are saying, oh, your minimum wage is high, yeah, but your minimum cost of living is high too. This is relatively mild downturn date considering values remain 31% higher than they were 5 years ago. Remember, this all started with a lot of foreign investors that were scared of what policies changing in China and wanted to park their money on other shores, right? Said CoreLogic, a head of research team, Tim Lawless, reported, housing downturn gathers momentum in July with implication that there's a lot of room to fall. Mind you guys, we're going to start to see the true numbers in Australia right now, because they're going into spring right now in Australia. They're in the southern hemisphere, so they are going into spring. So these true numbers of this next fourth quarter of the year is going to give us a really good indication on where Australia is heading. With Q4 numbers released in first week of January of 2019, we'll know how far underwater the real estate level will be, or depending on which city or province you are in. To tamp down on excess in the housing market to keep banks from exposing themselves to even more risk, Australia banking regulator APRA, the Council of Financial Regulators, started in 2014 to introduce macroprudential policies that were the first completely influential, but now pulling the rug out from under the housing speculators and investors. These policies include 30% limit per bank on interest-only mortgages and higher interest rates on mortgages for investors. Investors and speculators are now also getting rattled by declining property prices on top of historically low rental yields, though they are now creeping up as prices decline. In terms of owner-occupied homes, banks have been pushed after publicized scandals, shenanigans, and recent findings by Royal Commission investigating to look into the debt-income ratios and new emphasis that has effectively taken potential buyers off the market, potentially in most expensive cities such as Sydney and Melbourne. Remember, they lost a lot of applications, or a lot of deals went down the tubes because of a lot of mislending practices, lying on their TDS scores, their total debt service ratio, and adding more income that wasn't there, and using apparently a notice of assessments or assessment of income from 10 years ago and say, oh, this is good. Oh, you made this 10 years ago. This is great. We'll use this for this year. Oh, it's been an absolute disaster. Lots of garbage on the books. And now the banks in Australia are going to start to see the pinch when they're going to have to foreclose on homes. So we're going to see what happens with that in Q1 of 2019. These dynamics are being accompanied by a surge in new construction coming on the market, according to CoreLogic. Oh my God, the amount of cranes in Sydney. It's just baffling. The amount of construction expansion in the country is just phenomenal right now. Real estate moves slowly. Prices change, drag out there many years. It is rare, and the market makes such a beautifully defined U-turn after a long, hard surge as the markets in Sydney and Melbourne. A historical home price spike in Seattle, sharp increases in other metros. But New York condos fall, so that's another American housing crisis discussion for another day. But Wolf Street, thank you for bringing the story out to us. It really means a lot to me that people are actually taking a good look at what's happening in other countries. And why I talk about Australia, it's because it's a huge domino effect. It's a global crisis. A lot of people that have been tuned in my channel have been learning, wait a minute, this is happening in Vancouver. Wait a minute, this is happening in Toronto. Wait a minute, this is now happening in Montreal. We're bidding, watch my Montreal video, just put a bidding wars. Foreign investors are pouring in. It's happening everywhere. So every English-speaking country is being crippled, being bought out. Parents are worried that their kids and grandkids and great-grandkids are completely bought out of the housing market or can't even afford to live. I asked the question the other day. It's not that I could live to be 85. I'm not worried about living to be 85. I'm more worried, can I afford to be 85? That is the question. Never mind pensions. Can you afford to be 85? Let me know in the comments below. I'd like to know if you're watching this in Australia. Big hug to you guys. I'd like to get some of you guys on my show, whether you're in Hobart, whether you're in Sydney, Melbourne, wherever you're at. Please message me. Give me some information. I'd like to call you guys, or you guys call me if you're on a plan, because for me to call you guys, it's a fortune. If we could have some sort of a way to discuss and talk, I'd love to have you on my show so we could go over some of the pros and cons on what's happening in Australia with this housing market. Big hug to everybody out there in the Southern Hemisphere, and I hope everyone has a happy spring in the next coming weeks, and thanks for watching, guys.